Thank you for listening to the Financial Lens episode titled Financial Checklist for Retirement. You know, retirement is that stage of life which we all look forward to, working hard for many years, but we have some very important financial decisions to make really prior to our retirement. The first and the most important, in my estimation, is to decide where we are living. Now, that might include to relocate to another area, or it might include downsizing. The reason that's important is because the place where we live often will have a tax implication. The most important decision where we live, or the criterion we use to determine where we live, is proximity to family and perhaps friends. Those are the folks that give us the more pleasure in life, and we don't want to relocate and be disconnected from our loved ones. The second most important consideration is quality of life. Where would you like to live? What area has those amenities that you're interested in? What area has the weather that you enjoy? What area has the things to do that resonate with those things you enjoy doing the most? And the third most important criterion we look at is cost of living. Cost of living can vary tremendously from different states, from different locations, and between the three of those, we want to really decide which area we live in that will give us the greatest quality of life, give us the proximity to the family, which is the most important, and also keep our costs down. The second thing we want to look at is paying down our debts, or maybe eliminating our debts. Or I should say that's another piece in that category of reducing our overhead. You know, when we retire, we are on a fixed income by and large. So the more we can reduce our expenses, the more income we have to pay our bills that we need to pay and to enjoy. When we look at the idea of debt, that is money out the door that we get very little value for. What could it include? Well, it could include our mortgage. We'd like to pay off our mortgage. It could include college loans, especially if we have children that finished college not too long ago. We want to try and pay that down. If we have a car payment, that is something that we would like to pay down. And of course, credit card debt is something that will be very important to pay down. The third criterion, or the third item on our checklist, is we want to look at an income plan. How are we going to meet our income needs over our lifetime? If we have an income shortage, well, we're going to know how to close that gap. And how do we do that? Which investments do we take our money from, and when? What is the tax implication of that? We also want to look at how do we enjoy the assets that we have in a way that will give us a great quality of life, and also make sure that we don't run out of money so that we have a financial crisis in our later years. Fourth thing we want to look at is we want to look at revising our portfolio. And there are a few things we want to look at or consider regarding revising our portfolio. Firstly, we want to make sure we have the right amount of liquidity. Not too much, not too little. There's a rule of thumb that when you are working, you might want to have 6 months of cash flow in case you were to get laid off, so you have money to cover and tide you over. One thing, though, is when you're retired, you're not relying on that paycheck. Between your Social Security and maybe your pension, you have that income coming in on a regular basis. We do not need to be concerned about not having that money on hand if something should happen. Other than, of course, having spare funds on hand for emergencies, money on hand for that rainy day fund. One thing I do recommend to many of my clients is that you consider taking out a home equity line of credit while you're working, and you can qualify for the loan. Why? Because if you have access to liquid money through a loan, you don't have to have as much liquid money sitting in the bank getting no interest. A home equity line of credit will not cost you any interest until you actually pull out the money, and then when you pull it out, the interest is fairly low, and you can pay it out at your leisure and pay that debt down. We don't want to keep that debt going, but we do want to have it available so that if we do need cash, we can take care of that. The other thing we want to look at is we want to look at having the right amount of risk. As we get older, the long-term growth is less important, and the risk related to having a loss in the stock market or other risky investment is greater. We just don't have that long of a runway to make up those losses. So we want to make sure we have the right amount of risk, and along with that, we want to make sure that given the right amount of risk, we're getting the best returns. Get the right investments in place for those parts of our portfolio that are low risk. And sometimes what we do is we look at replacing the less productive assets with more productive assets. If we look at the stock market, it looks like the international markets will outperform the US. That's an opportunity. And it also looks like the annuities will outperform bonds, and there's another opportunity to get some better returns with a safe investment by looking to annuities instead of bonds. Last thing we want to talk about on our financial checklist for retirement is to make sure all our documents are set up properly. This includes our will, it includes our power of attorney, advanced medical directive, and it includes the HIPAA, the healthcare power of attorney. We may also want to look at trusts that will help us avoid probate and might also be helpful in helping us protect our assets from nursing homes. And finally, we want to make sure that all the beneficiaries on our accounts are set up properly. Include investments, bank accounts, 401ks, brokerage accounts, if we have a life insurance in place from a previous employer or a state government, or if we have our personal life insurance policies in place, we want to make sure that all the beneficiaries are set up, because we might have had life changes in spouses passing, changes in relationship with children. We want to make sure that all those things are set up properly. Thanks for listening to the Financial Lens Financial Checklist for Retirement.